Alrighty, guys. Hopefully everyone enjoyed their 3-day weekend. It was a nice little break for everyone, ready to get back into it, hopefully. It is Monday, May 29th. I hope you guys enjoyed your weekend, and I'm ready to just kind of jump in and talk about what we're going to be looking at this week. So, like we just talked about before, we do have a lot of news this week. A lot of the 10 a.m. news is what we're going to pay attention to. On Tuesday, we do have 10 a.m. consumer confidence. Wednesday, we also have 10 a.m. job openings. Thursday, we also have some 10 a.m. news. We have PMI. And then Friday, we don't really have anything. We have pre-market news, which is something we want to know about, but we don't really need to worry about that much because I won't be trading then. So jumping into the charts, let's talk about kind of where we are. What do I expect? Let's bring up just ES here at the start, talk about, where we are in the chart. So first thing I want to talk about is going on to a daily time frame. So original draw on liquidity. I'm going to take off all this old stuff so I can clear up my charts a bit. I do have a lot of extra added stuff. So draw on liquidity this week was this low. This is going to be an area that we want to watch in the coming weeks, depending on if we trend higher or if we, decide to come back down. This will be a key sell side level because we have all these stacked lows here, right? We have 1, 2, 3. We have 3 relative equal lows down here on a daily time frame, right? A daily time frame. So this is going to be a very key sell side level that we're going to be watching for. Now, if we want to see higher, right, which we do, notice when we did have that big day on Friday, that trending day, notice the push right through this daily fair value gap. So we had a daily fair value gap here, and we had a big push through this. So if we want to see higher now, so if we zoom out here, we also have this level up here, right? If this is now the draw, means this is buy side liquidity on a bigger time frame. If we want to see higher, we'd have to see this fair value gap now hold, right? So what I want to see is I'd like to see a retracement back into this inverse fair value gap, and then potentially see a bounce higher to eventually, take out that external buy side level. Now, this push that we see up right here could be internal being swept, because we can see that we have these 2 external highs, right? We have this high, we have relative equal highs, and then we've now finally swept this. So now we've had a big push down into the range, a big recovery bounce, sweeping that high, right? So if we zoom back in now, 4 hour, this is now that internal level being swept on a bigger time frame. So going into tomorrow, I would like to see us retrace now back in a discount. So I go from the high to the low of this range, and that's going to be back inside of that daily fair value gap. So I'm going to mark in this fair value gap that we have right here. So what I'm going to do is I'm going to mark in this low just to, know it's there. And what I'm going to do is I'm going to draw in this 4 hour fair value gap that is going to align with that discount premium, right? So I want to see us retrace back down potentially into this 4 hour fair value gap, right? Because we've came up, had a big push, we've swept that sell side level. Now we could potentially see higher, maybe sweep this internal level and then potentially head back. But what I would like to see is a potential retracement back down to discount. And then from there, we'll see, okay, do we want to hold this, start showing, positive bullish structure to then bounce to the highs? Or once we retrace back to discount, are we going to go through this and then eventually possibly have strong selling pressure to take out these equal lows down here? So I'm expecting tomorrow to potentially see a sell-off back into discount, either in the overnight session or at the open, depending what it is, right? One thing we want to pay attention to, I think we talked about this a little bit before, but we want to pay attention to whatever the draw is going into the day. If that level is taken out pre-market, then we can expect to see chop most of the time, right? So that's a key thing I want everyone to know, right? If we take out whatever the draw is pre-market, we can expect to most likely see some sort of chop at the open, right? So for example, let's say, this is the chart right here. Market's going to open, and then let's say pre-market here, pre-market, and then we dump, and then market opens like right here, right? So if market opens right here, now what do you think if my bias was like this, right? If market was going to open right here, my bias would be short, right? My bias would be short because we've came up, swept that high, big displacement back down, and now we're starting to chop, right? So if we're starting to chop here, number one, I want to see, okay, are we chopping inside of like a fair value gap? Is that going to give me bias? And then once I start seeing more pressure, I can then look to take a position. But if we take out this level before market open, I want to be patient to take any sort of position because I can expect to see a lot of the time I'm going to see chop before that. But if market opens like this, right? Let's say market opens here, I could potentially take a long or a short depending on how we react at this level, right? So let's say we sweep this level here. Again, this is a 30-minute high, so it is something I want to pay attention to. I'd want to zoom into a 5-minute, see how we react. If we do, I'd want to see if we can catch that sell, then back to whatever that recent sell side level is. But if we do end up closing above this with strong volume, we could potentially see higher to then take this level out. Now, what I am expecting to see and what I kind of would want to see is this high being taken, maybe forming SMT, right? Potentially like this, forming SMT like this, and then potentially seeing lower. We do have equal lows right here on ES. Again, all of this doesn't really matter because most of the time both these levels will be taken out in the overnight session. But I'm just talking about right now, right? It's just what I would want to see price action wise. So if we do open somewhere up here, again, a lot of the time my bias won't form until I see what happens in the morning, whatever happened in the overnight session. But for now, I do want to see a push back down into discount on a bigger time frame, right? We have this whole entire range here. So also notice we do have, I'm going to mark in those highs. So I'm going to keep this drawn in, those equal lows. I'll draw on this little high here. And then I want to see either one of these being swept on a bigger time frame, right? So what we're notice, again, bigger time frame wise, we're still in this daily volume imbalance. So if we look right here, we have this volume imbalance right here. Or actually, I think this is on the 4-hour. Or maybe it was a daily. No, it was a daily. So we have that volume imbalance. We've came down, swept external buy side already, bounced back, creating 3 relative equal lows on here as sell side liquidity, right? I want to see this eventually get taken out in the coming week. Swept this high now, and then now I'd like to see a sell-off back. But we could come up to take internal, right? If we're looking for a model or whatever it is, we could now bounce one more time to then sweep that internal level and then look to take a short, right? So that's why we want to look at all these time frames, because bigger time frame, I am bearish, but smaller time frame, we still could be a little bit bullish. But once we sweep this high again, especially if we can notice the kind of volume, I'd like to see big displacement back down and then eventually see displacement back inside this bigger, overall range that we have here. So ES looking good going into the rest of the week. We'll see what happens in the overnight session. Let's take a look at NQ now. NQ, again, a little bit differently just because of the where I have a lot more strength with NQ in the last couple of weeks. So something that we want to pay attention to. One thing I'm going to start out on is the daily. Actually, I'll start out on the weekly. We do have a weekly fair value gap here that we want to pay attention to, that we're coming up into here. So we have a weekly fair value gap. We've broken this level again, strong volume. Notice this is not a liquidity sweep. Most of the time, if we're going to get some sort of sweep, we'd want to see a break of this high and then displacement right back down. Notice we have just a big push through this level. This is telling me that, again, we're in a strong uptrend, and I'd want to see what happens now. Since we are in this weekly fair value gap, I'd like to see how we start to react up at these levels. Now, notice we have just a super strong trend here on NQ. And a lot of it was from, again, that big move on Friday was because of NVIDIA. NVIDIA had insane earnings. I know a lot of people that traded the earnings for NVIDIA and made a lot of money. So that's why we had just this rally, absolute massive rally on NQ. If we look at the move in the last, this was Wednesday to Friday, we have almost a 900-point move on NQ. Absolutely insane in just 2 days, right? So massive trend days, right? So this is telling me, right, what do we expect after seeing this kind of move, right? Either one of two things. We're either going to see consolidation, which is what we're already seeing here. So what I'm honestly expecting to see is something like this. Like, a lot of the times, if we're going to expect to see some sort of range start to form this week, right? And then I want to see a manipulation move. So we know markets moves in 3, right? We have distribution, consolidation, manipulation, and then redistribution. So we have this move up. I'd want to see us consolidate possibly up here, right? Have some sort of consolidation, manipulation move, which is taking out all those highs, and then having that move back down, right? So I can expect to possibly see some consolidation this week. I would like to see us retrace back down. So I'm going to draw in. We have this 1 hour fair value gap here that I'd like to see retrace back down into, and sell back off into that discount range, right? If I do look at the overall the 4 hour time frame, and I draw in this just entire range here. Now I would draw in this first because this, if we zoom into a 1 hour, that's our most recent low that we put in, which was this low right here. So I'd draw this again. Notice 50% lies right in that 1 hour fair value gap. So I'd like to see that. But if we do zoom out bigger time frame wise, that discount is lower because the recent low we put in is this, right? So this low right here. So discount would be around down here. So again, going into this week, I'm bearish on both ES and NQ. Now, since we've had this big move, I'm expecting this to potentially see consolidation. Now, I like trading consolidation because I'm seeing consolidation on a bigger time frame. The reason is because that means I'm going to get a lot of more setups to trade some sort of liquidity sweep. Now, I'll explain that one more time, right? So if we have a big move on a 4 hour, right? If we're looking at a 4 hour, we're looking at the daily, we've had this absolute monster move. If I can expect some sort of consolidation now after a big move, that means internal levels are going to be swept. For example, we have, a big move like this, and then we kind of have some, this isn't a good example, but we have consolidation. But notice we sweep this high and then instantly sell off, right? I want to see that now start to form because our strategy is built for that, right? When we have consolidation on a bigger time frame, because when we zoom in, let's say, market moves like this, we start to even just, smaller moves like this or whatever it is, what we could look to trade is when we zoom in, right, to a 30-minute or whatever it is, all those levels that are going to be put in are going to be levels that we can trade off of, right? Because since we're trading consolidation on a bigger time frame, what I'm going to trade is I'm going to be like, okay, let's say we put a low in right here. I'm going to watch this get swept and then trade that alongside, right? I'm going to look to trade whatever that reversal is, targeting that previous buy side level. So when I see consolidation on a bigger time frame, that gives me more confidence to trade our model on a smaller time frame because we know how the action is going to move on a bigger time frame, and that gives us more conviction whatever we're trading, right? So going in, I do want to see retracement back down to these fair value gaps. Now, I do want to go over the scalping model that we did trade. So let me pull up ES and NQ and then NQ here. So if you guys haven't already, we've been talking a lot about my scalping model and how it's been working recently. And we did take a setup on it on Friday. Unfortunately, I ended up getting stopped out and it was completely my fault. The reason is because I didn't properly adjust my risk to the trade, meaning I was not prepared for what should be invalidation of the setup. So the setup we took, right, for the scalping model of what we want to see is the first thing is we need some sort of strong trend, right? We look at the day, just absolute monster trend, right? Literally just straight up. That's the first thing in our checkbox. The next thing is retracement to some sort of discount premium. So looking at this, it's kind of hard to tell if we are in discount, but the way that I like to tell for discount is if I have an SMT, whatever the SMT is going to be the low of whatever the range is. So what I do is I draw the fib from the high to the low, and we did reach discount. And the reason that this is the low that we're looking at is because this is the low that was actually created by the SMT, right? Looking at ES, same low here. ES makes a lower low, and Q never ends up breaking this low, right? So that is discount of the range. That's number 2. Notice we also have another SMT right here, right? ES sweeps this low, and Q never sweeps that previous low. So now we have pullback to discount, an SMT, clear trend. Now, the next thing we look for is just a fair value gap. So we have our first fair value gap right here. We get a big push up. Notice on this model, we do not need a break of structure. So we wait for a pullback to fair value gap. I entered long. Now, my stop for this trade should be whatever the previous wick is, right? And it would be this low right here. I decided I didn't want to risk that much on this trade and ended up putting my stop at the bottom of the wick or at the bottom of the candle. Ended up coming down, stopping me out. Notice never ended up breaking this fair value gap. This 1 minute fair value gap never ended up breaking below it, continued to hold this, and then ended up playing out beautifully to first price target, and then second price target was somewhere up here, and then ended up just running the rest of the day, right? So this was my fault on this trade, right? Stop should always be at whatever that low is. Put it at the wick. That should be my actual stop for this trade. never got stopped. So I am going to continue to say, right, from what I've seen so far in this scalping model, I have not seen it fail yet. So that's something that I'm going to pay attention to, because this, again, when we've talked about this setup before, I like to talk about it in the sense that this is what you want to take when you're in drawdown. This is something that you can build confidence with and know that a lot of the time, this is going to be the setup that can, bring you a lot of wins and make you a lot of money, because the consistency with it, right? If you have the discipline to only wait for this type of setup, you will find so much consistency, because I have yet to find a setup with every requirement for this model, and it has not failed yet. And everybody who's been in the charting sessions and been in the live and every setup that we've looked at so far that has these requirements can attest that I don't think we've seen one setup that have actually been that have failed if you acquire proper risk, right? Now this failed because I failed to acquire proper risk, put the right stop. Still ended up working out. Now it sucked because I did end up taking this trade right here after this buy side was never taken. I waited for the pullback, and then I entered here, stopped below that previous wick, and then I caught this move to whatever that buy side was. But this should be original entry. Should have never gotten stopped on that first trade. So this was the trade we took on Friday. Again, beautiful setup. This is what we want to see, right? This is what we want to see for that scalping setup. Brother, gonna jinx it? Hopefully not. But again, I'm just saying the facts and the statistics at this point. So again, another setup that actually ended up playing out was this one right here. So another one, right? Looking at this trade right here, another scalping model that I actually saw later in the day. I didn't take it because I was charting after Friday night and looking back at the setups. Notice we put a low in right here. Remember, draw in the high to the low. We've reached a discount. Once we bounce from that SMT, right? Once we start to bounce, notice ES never took that low yet. Right when we take this low, boom, form SMT. Wait for that strong bounce. Notice, boom, strong bounce. You take whatever the first fair value gap is. Boom, there you go. Targeting buy side liquidity. Stop at the low. There you go. Beautiful. Another perfect model. And same thing on ES. First fair value gap. And look at the risk reward on this as well, guys. Pull back to the fair value gap. Now, your first target, this should be your first target. You should still have room on this, right? But 3.33 for your 50% off, right? Then you let this run, 420, 4220. Again, I always do, if I'm in a trend move, I'll look for whatever previous buy side is, but if there isn't any, I'll just do whatever, whole numbers are. So I'll do, the 4220 level. And this is a six risk reward on the trade, guys. This is such a powerful model to trade during trend days. Now, the reason I created this is I started seeing this model play out a lot consistently. And most of the time, I did not like trading trend days, because most of the time when I trade trend days, a lot of the people that trade how I trade, they'll just take any fair value gap. And a lot of the time that will not work. Whenever you're trading trend days, if you trade, just taking whatever fair value gap you enter, a lot of the times it might work, but a lot of times you won't find consistency with it. So I found out if you, apply all of these PD arrays like SMT, discount, get the initial, volume, and then you get that fair value gap. Once you apply all these things, you can build such a confident and consistent model that is going to, constantly, show itself over and over again. So this is a model that I've added to the book. I've been gaining a lot of confidence with recently, and we'll continue to watch this throughout the market. Every day that we go live, we'll always be looking for the setup depending on, what market conditions are, if we're trending, if we're not. But even if for this specific model, you can actually trade this. We do not need to be in a trend to trade this. And the reason is because if there's some sort of clear draw, you really only need an SMT discount and good displacement in a fair value gap to enter a long position. If you have a clear draw on liquidity, that's all really you need. The reason why the trend works out so well is because you already have confidence in where the market's going, right? The market's already showing you where it's going. Most of the time, if you get a good entry, good displacement back to discount, the market will continue in whatever direction it's showing you. But if you don't have a clear trend, the SMT is going to still show you where market wants to go. And if you have a clear draw, that's also going to show you where the market wants to go. So looking at like for example, if I was looking at the market right now, right this second, let me go to a 5 minute, right? If we come down here, right? Let's say market comes down, let's say ES comes down and sweeps this low right here, right? Now, we have equal highs above us, bigger time frame. I know we're consolidating, right? Look at this chop, right? Up, down, up, down. So what could I expect here? Well, on a 5 minute, I could possibly expect ES to come down. Again, notice we have 3 equal lows right here. 3 equal lows. This is now the draw on liquidity, what I'd want to see get taken out. Once this gets taken, look at how strong NQ is right here. I don't expect NQ to make it all the way down here in time. So what I most likely would see is ES comes down, sweeps this level. Notice we have buy side. We can tell we're in consolidation, right? So with this, we're in a trend. With this, we're in consolidation, which means we can expect to possibly see a low get taken out and then immediately seeing buying pressure back to the upside, right? Because we've already seen that before, right? We have a low here, low gets swept, immediately, buying pressure back to the upside. So once we sweep this low, I could potentially wait to see an SMT, right? I'm already predicting that we could possibly see an SMT because I'm recognizing the strength and weakness between the two. Noticing ES just put this low in. We're literally less than a tick away from sweeping sell side. And Q, we have a lot of room when we put that low, and we still have a lot of room to the downside before taking out that low. So once ES comes down, sweeps this, I would look to go, jump down to the 1 minute and wait to see that internal market structure form, right? Which I'd wait to see whatever that model is. So push down, SMT, potentially internal, and then push back up. And then I just fair value gap, targeting whatever those recent highs is. And then on a bigger time frame, on a 5 minute, it would be this high first. So using just SMTs, sell side level being swept, discount premium, recognizing what market conditions are in. Currently right here, this consolidation, which means I can use this same model, right? By just using SMTs, because I know if we break a low or break a high, a lot of the times we're not going to get any follow through. We're just going to, rebounce right back up. So use that to my advantage, knowing I can recognize we're in consolidation on a bigger time frame. So using that to my advantage, I can then zoom in and watch how we react at these levels, right? Once we take this level out, are we going to show displacement back inside the range, or are we going to, dump through this? Now, I would not expect to see dump through this because of, what I've seen from market structure. So it's just recognizing those conditions and then adapting our model to be able to trade that way. And that's going to be how we get the highest conviction, highest confidence setups, is when we recognize the conditions and then tweak our model based off of it. Does anybody have any questions so far? SMT, why are you not taking the pair that swept liquidity? Because a lot of so again, there's two different ways that I would trade that, right? If I get an SMT and I'm looking to take a trade, a lot of the times I will take the trade, whichever one is stronger, right? Whichever one's stronger. And obviously, whichever one is stronger is probably the one that's making whatever the higher or the lower high is, right? Or the higher low. So for example, if we're looking at strength and weakness right now, number one, just looking at NQ, you can tell NQ stronger, right? If we look at, the move from ES, we have, move up consolidation, starting to move down. We sweep this low. NQ never even came close to sweep this low. So NQ is obviously stronger. A lot of the times when I see an SMT, I'm going to take whatever one is not taking that level out, because it's going to be either the weaker one or the stronger one, right? Because if we have an SMT at the highs, right? Let's say, move up, and then a move down. And then let's say NQ is, move up, and then a lower high, and then a move down. I'm going to take the one that made the lower high, because this is obviously weaker, right? And if I'm taking to the downside, I want the one that's weaker, right? Does that make sense? And then same thing goes for this example as well. Yeah, I got you. Would you consider the buy side levels on a 15-minute as low resistance? Let's see. The buy side. It could, yeah. It could for sure. Right? Now, the reason it's kind of hard to tell, right, is because this is a gap up. And I don't like that the high that we created here is literally just, there's no extra, there's no formation to the left of this, right? It's just a gap up. Now, it's the reason I would say it's hard to tell if it's low resistance or not is because of that. We have that gap up, right? I'd want to see a little bit more formation on this side to, get a better understanding. But yes, this could absolutely be low resistance if we come down, maybe sweep this low and then, see higher. But, you could already see that as well, right? We've already closed this gap out. We've put in a low. We've had, big displacement. If we're looking at a 5 minute, we're, pulling back down to discount, potentially OTE. Let me draw this in here. Template, fib, right? Coming into OTE, you could definitely see higher now. But I would like to see, if I was going to take a trade, I'd want to see this low get swept, right? Because again, I want to take the trade with the best possible, because if I'm looking at ES right here, right? We're in a downtrend, right? We're making lower highs, pull back to fair value gap. You have a break right here, pull back, equal lows below us. I'd want to see, a push now back down. Looking at the 1 minute here, right? And Q, this would become, I would want to see, a breakdown out of this. So if I had to, take a trade right now, if I was going to take, I would short here on ES targeting equal lows here, right? How do you identify your draw and liquidity? What do you usually look for? So a lot of it's just market structure, right? So if I'm looking at this, right? I know on a bigger time frame, I'm bearish because we've swept this external high. We've had a gap up, immediately started selling back off, and now we're starting to form lower highs, right? So we come up, we put in a high here, come up, never break that high. We're forming a lower high, right? Come up, never break that lower high, come up, lower high. So now I'm expecting whatever that recent low is to now, get broken. And we have equal lows right here. We know equal lows most of the time act as a magnet because that's where a lot of liquidity is going to be resting. When we have 3 equal lows stacked, a lot of the time that's going to be something that's going to be hunted. So I'd want to see a sell-off to then target those equal lows. And then once we do target those equal lows, most of the time we would see just a sweep of this and then a head back towards the highs. If you didn't see the equal lows there, couldn't you interpret this as a sell side sweep to potential move upwards? Potentially, yeah, you could. You could absolutely. That's why I wouldn't take this short trade right here, right? Because I could be, you're actually right. You could be that wrong, right? If we're looking at this, we could look at this as saying, okay, sell side swept, move up, pulling back into this fair value gap, and then now seeing higher, right? Absolutely. You could definitely see it like that. Now, if I was going to look at it like that, I'd want to look at NQ and say, okay, are we forming SMT here? Which we're not, I don't think. Actually, wait. What's this low right here? Maybe we are. It's kind of an awkward low. Again, I don't really like trading aftermarket because, again, notice if this was the low here, we'd be forming SMT, but it's right here, which cuts through price action, which I don't like taking any sort of SMT that cuts through price action. So that's why I wouldn't trade any after hour sessions, but it's just able to take, whatever the draw is. So again, whatever my bias is gonna form when I wake up tomorrow and I see market open. Do you mostly scalp or do you always take longer term plays? Most of the time I scalp, honestly. I don't trade long term plays. Again, a lot of my trades are open and closed in the span of either like 5 to 20 minutes, I'd say. Any other questions? I think that's really all I have for you guys tonight. Excited to start the week. Nice 3-day weekend. Ready to get back at it. Which of the two between Apex and FFN would you say would be faster to obtain? Faster to obtain, I would say Apex. Can you show us your fib setup real quick? Yeah, I just fucked it up, so I got to redo it though, because it's literally just this. I forgot to save my other one, so I got to redo it. It's just search up standard deviation. It's whatever the standard deviation settings are. I forgot what they are. I'm pretty sure it's just. Oh wait, no, I have them here. I'm good. Never mind. We're good. Is Apex a good prop? Yes and no. How do you get the projection on it? Just put in these numbers. So 1, 0, -1, -2, -2.5, -4, 0.5. So this is called standard deviation, which is something we'll go over. We've gone over it a little bit, like all these numbers right here, right? All these -1, negative. It's called standard deviation. So what this is basically I'll draw the model out for you guys. So how we use this is when we have, let's say, a higher time frame level here, and then we have, market moving higher, right? Internal liquidity swept right here, and then we have market structure shift, pull back, and then down, right? So this would be our internal being swept, right? Internal sell side being swept, external buy side. Internal buy side being swept, and then this would be my market structure shift. And then fair value gap, order breaker block, whatever it is, right? So the way that I use standard deviation is to have projected targets of wherever the market can go. So what you do is you take whatever the high is, you take whatever the manipulation leg is. So the manipulation leg is whatever the leg is to sweep internal. So notice we have internal here, and then we put in that high. So you take the low to the high, and this is the standard deviation of whatever those targets are going to be. Most of the time, your target will lie is if you want it to align with whatever sell side level is around -2 to -2.4, and then let a runner to 4. So a lot of the time, if you have like here, I'll show you guys some examples. Actually, let me what I'll do is I'm gonna screenshot this so you guys have this as well. So you guys can screenshot this if you want. But this is what standard deviation looks like. I'll screenshot this and put it in the Discord if anybody wants it. Okay, so let's find an example of this. So let's go to 15-minute. We'll see if we can find some sort of level, right? So we'll look at this, right? Let's do, will this work? Not really. Oh, we can do this, I guess. This will work, I guess. I was drawing this out for a masterclass example, but let me drop into a 3-minute. We'll see if I can get a 3-minute on this. Move this over. Hold on, let me find this real quick. There we go. Wait, is this it? No, that's not it. There we go. All right, so we have buy side swept here, right? Now, what is the manipulation move? It's this right here, right? This would be internal being swept. So this would be your manipulation move. Now, this is a big manipulation move, though. Or sorry. So you take the low to the high manipulation move. Now, this is a big one, right? So I wouldn't, again, you want it to align with whatever you're looking at. So for this, now we end up hitting this. And then bouncing. Again, I can't really see on the left side, so it's kind of hard to tell, but that's basically how it works. Can you go over internal versus external liquidity, please? Isn't everything internal if you keep scaling up? Yeah, that's exactly right. So when I say internal, external, I'm not necessarily saying it. It's basically saying it whatever the specific model I'm looking at, right? So if I'm looking at this time frame right here, I would say, okay, this is my external buy side. This is my external sell side. If I was going to zoom in here though, and say, okay, I'm going to zoom in, or I can't really zoom in because I'm on a smaller time frame, but let's say I drop in, like, let's say this is a 15-minute and then I drop into a 1-minute and then I look down here, I'm going to say, okay, this is internal swept or whatever it is, right? So it depends on whatever the specific time frame I'm looking at, right? Whatever the model is. The internal liquidity being swept is going to be whatever that is in the specific trend. So if we sweep external, then I'm going to look for internal to be swept, which is going to be whatever that smaller time frame is, right? Does that make sense? So like this would be external swept, right? External swept, and then this would be internal swept being up here. because we've already swept that external level. So now I'd see this and then market structure shift once we break that low, right? All right, guys. I think that's all I have for you guys. Would you only take it market structure shift? Wait, on the 15-minute sell side liquidity to the short side, would you only take it if market structure? What do you mean? Confused on the question, to be honest. How do you know the difference between draw on liquidity and market structure shift? They're two different things. The draw on liquidity is wherever I think we're going to go. Right. So right now, the draw on liquidity is these three equal lows right here for ES, right? Now, market structure shift, liquidity sweep is after, right? So at this right here is the draw on liquidity. We have not swept this level though, right? Once we break this, then we can see if it is liquidity sweep, because we don't even know if it's liquidity sweep until we see the reaction of this, right? Are we going to, push this, retest, and then have push lower? Or are we going to push through this? We see selling volume starts to slow down, and then we get big displacement back inside that range. Then that's going to show me it's a liquidity sweep, right? We have to wait to see the reaction of that level. The draw on liquidity is just where we think we're going to go. Once we actually get there, then we're looking to see if it's a liquidity sweep. Can a wick be considered a sweep, or does there need to be a candle close? No, a wick. That's a wick. That's it. That's all you need, is literally just a little push above. That's what we want to see if it's a liquidity sweep, right? Just a push above, and then we automatically come. We don't want to see it go a lot through it. That's going to show extra strength that we don't want. If we're trying to play the reversal, we want to see just a break of that level and then immediate pushback down. So to go short and have to wait for the big move and fair value gap then entry. Wait, so to go short, you have to wait for the big move and fair value gap then entry. I'm still confused. It depends. It depends on the model. Like if this example, if you to go, if I was going to go long, right, I have to go long because I could short this targeting the draw, right? I could, but again, the risk reward is going to be a little bit skewed. Especially if I enter here, it's not going to be the best, right? It's going to be 1.1, which is not bad, but it's not really what I want. What I'd want to wait for is once we sweep this, then I zoom in, right? So I go to the 5-minute, right? Because this is a 15-minute. What I'd want to see is I'd want to see our model start to play. So once we sweep this, number one, are we forming SMT? Once we are, if we are forming SMT, I can take whatever the first fair value gap is. So if we have formed a fair value gap, then I can look to potentially take a long, right? So what standard deviation would look like, it'd be this, right? Come down, sweep internal, break a structure, fair value gap, buy side, right? Or whatever that move is. Do you trade silver bullet often? Sometimes. That's what I was talking about tomorrow. Since we have a lot of 10 a.m. news, I'm going to be waiting for the manipulation and then seeing if we'll trade the IC silver bullet. All right, guys. I'm going to end the session there. I got to get ready for the masterclass that we have tonight as well. So enjoy the rest of your night. If anybody has any extra questions, feel free to just at me in the Discord and I'll get back to you. So enjoy the rest of your night, guys. I will see you all tomorrow morning. Much love, guys. Peace.